There I am. Okay. Good morning, everybody. I think we are just about ready to start. Let me see. Let me see how many participants we have on right now. Yeah, we have over 60 attendees in the house, and you guys are ready and willing to learn some useful information. Good morning once again, and welcome to today's session, Funding the Future. We're here to tackle the question that every MSME faces. How can I access capital to scale sustainably? Now, for the 56 of you who are our attendees today, raise your hand in the chat if you've ever tried to get a loan, if you've ever tried to get funding for your business. Just put up a raised hand emoji or send me. Just type in the two letters, me, ME. If you've ever tried to get a loan, raise your hand. Whether it's been successful or not, raise your hand in the chat. I see some people saying me. Yep. So the comments are coming in. Tanuk says me. Kimali says me. Nadia says me. Andrew Forrest says me. Dwayne Chambers says me. Kareem says me. Jim Brown has his hand up. Dave says me. Casey says me. All right. So everybody so far, a lot of you have already tried to receive funding, especially through loan financing. Now, let me know in the chat as well. Type yes if you have been successful in securing that financing, and type no if you were denied, if you were not able to receive the financing. So let me do this impromptu little poll and see how many people were able to get through. Kareem says no. Jim says no. Tanuk says no. Andrew says no. I'm seeing a lot of no's. Damari says yes. We have one yes. Dwayne says yes. Two yeses so far. We have about 6 or 7 no's. So the no's are outnumbering the yeses, which means that those of you in the chat, those of you who are attending, you know how difficult this can be to go through that process of securing financing. But I do want you to know that there are different alternatives out there for you. Loans are not the only solution, and we have several different points of view and different perspectives here for you today. So we're going to be talking to quite a few people who can help you on that track to accessing capital and scaling your businesses sustainably. So, our purpose today is to demystify financing and show practical pathways for you, our MSMEs, to thrive. And joining us, we have an esteemed panel today. Dr. David Lowe is the Managing Director of the Development Bank of Jamaica, DBJ. He's a distinguished executive, investor, and corporate finance professional. He has over 25 years of experience spanning private equity, financial services, agriculture, manufacturing, and real estate development. So he's done a bit of everything. Prior to his appointment at DBJ, he was the CEO of Catalyst Holdings, which is a boutique advisory firm driving deal origination and transaction management for investment across the Caribbean. We also have with us Kevin Foreman, who's going to be giving us the lender's point of view. He's the SME Country Relationship Specialist over at JMMB. He's a career banker with over 20 years experience in the profession. He's held several roles across sales, client care operations, and loan adjudication. So he's a man that you really need to talk to and get in his head. He's been employed to JMMB Bank since 2013. And currently, like I said, he holds the position of Country SME Relationship Specialist. The next person on our panel list is going to give us the perspective from a business development point of view, capacity and support. Jacqueline Lloyd Carter is an MSME financing specialist at the JBDC, that's the Jamaica Business Development Corporation. She has over 20 years experience in the financial arena. She has a proven track record of helping clients to achieve their financial goals through strategies and comprehensive services. And she's adept at credit and credit administration and negotiations. Another person that you definitely want to get into her head. And then finally, on our panel, we have the real experience. We're going to hear from an actual entrepreneur who's been through the ringer. Ricardo Allen is the CEO and founder of One-on-One Education. You may have heard of this company. They're an edutech company in the Caribbean. They were recently listed as one of the top 100 edutech companies in the entire world. and their learning management system has empowered a plethora of regional institutions, corporations, governments, and individuals to roll out tailored, on-demand, and innovative learning solutions. So he's been through it, and we're going to hear all of these different perspectives today. So let me start by bringing in Dr. David Lowe. Good morning, Dr. Lowe.
To you, good morning. Delighted to be
Is
here.
everybody hearing
Looking
Dr.
forward.
Lowe very well? I'm hearing him kind of in and out, not very well.
Is this any better?
A little
Hello.
bit better. Yeah.
Okay, let me see if I move closer. Is this better?
Much better. Much better.
Okay,
Yes.
great. Good morning again. Happy to be here with my colleagues and look forward to participating in this very meaningful session today.
Okay.
So,
And just to remind you that Dr. Lowe is a managing director of DBJ. So we're getting the perspective from a macro level now. Dr. Lowe, why is expanding MSME access to capital such a strategic priority right now? Why is DBJ putting resources there?
well, let me answer that by putting things in context as to what represents the community of MSMEs. Statistics are always a good indicator, but I'm going to put some context around it. So first of all, if you look at the number of entities that form the MSME community, we're looking at approximately 425,000 registered entities in operation today. And that represents approximately 89% of all businesses in Jamaica right now. You take that further and you look at what they contribute to GDP, and you're looking at approximately 44% of GDP. And then when you put that in context in terms of jobs created and provided and maintained, you're looking at 60% of all the jobs that are in existence today. Now let's look at it over 5 years. In the last 5 years, we've seen the most dynamic change of that ecosystem, where during COVID, naturally, a lot of people ventured out into entrepreneurship. And we saw the highest number of new companies registered in 2020 during COVID, which was approximately 4,000 new entities that are still in existence. But 2024 was probably the most telling sign of the desire for Jamaicans to enter this new space as entrepreneurs. And we saw approximately 23,000 new businesses formed in 2024, which is, and if you look at what that looks like, it was 9% over the previous year. So there's a trend that is being developed that people are becoming more entrepreneurial in their outlook. And that means a lot to all the reasons I gave before in terms of the key metrics, the economic activity that it creates, but also how the bank has to position itself to recognize that if we're going to be a development bank that's agile and proactive, we need to understand what these trends are suggesting and where the MSME formation is taking place. And specifically, what sectors, are they productive sectors? Are they service-based? What are the types of things that they need to support their ability to scale and grow? And that is how the bank positions itself in this ecosystem. So with that in context, we think this is not just an important mandate for us to execute, but a necessary mandate to execute because we see ourselves as the deployment of billions of dollars into the financial landscape. As you would know, but let me just remind everyone, our business model is built around deployment of funding to the AFIs, which would be the deposit-taking institutions, the commercial banks, etc., and also the microfinance institutions, where we lend money to both of those channels to be able to on-lend to credit-worthy candidates and for them to scale their businesses. And the final comment I would say is that when we speak about MSMEs, we're not just concerned about their existence, we're concerned about their ability to scale and to be sustainable, to be here for the long term, where they can now access other opportunities, which include working capital and also the need for capital expansion in terms of machinery and equipment. So that's the best way to put in context why we believe this is an important and necessary mandate to pay attention to.
Yeah, absolutely. 60% of all jobs in the economy, that's a huge section that absolutely needs to be served. So what are some of the different types of solutions available now from the DBJ? What do you offer in terms of funding for MSMEs?
Okay, so we look at it as three pillars. We look at the debt side, which, as I mentioned before, we lend to AFIs and MFIs for them to on-lend. So that's through a credit solution. We also have grants, which is basically working with our international partners to develop specialized programs to support particular sectors across a breadth of enterprises. We're very keen on digital transformation. We're keen on finding solutions to bringing down energy costs, which is a major cost input for businesses, particularly small businesses that are scaling. And we also want to make sure that within the context of grant funding, we are creating capacity building where that will help their credit worthiness. And while that is considered a capital solution, is because rather than spending working capital on some of these capacity building programs that will help their businesses and their sector, we are dedicated to providing that as a support mechanism. And we also offer what we call the credit enhancement facility, which is a very important part of our portfolio. And what this does is to provide further security to the MFIs and the AFIs in terms of de-risking a business. So we're putting aside a pool of capital that acts as security and that will help to give comfort to a lender and also assist the beneficial candidate in getting the best possible rate. And the final approach that we've been working hard on for the last decade is looking at equity. And we believe that access to capital or funding should not be just based on debt appetite because it's expensive. But we want to create an environment where we can support private players to support entrepreneurs that have very impressive business models, ones that can be scalable, some that can be innovative in a way that they can be disruptive, but more importantly, to be able to create competition in the market. Because as we know, the more players we have in any particular market, there's going to be a competition to create cost-effective outcomes, which means that they need to be efficient to compete on price. And we also want to create an environment where other businesses thrive in an environment where they can benchmark and generate new ideas. So we see this ecosystem as not just a now process, but a life cycle of activities, and how we support it is important through equity also. So that would be the summary of the three platforms on which we operate. Not hearing.
So it's not just grants or loans. DBJ also does equity financing.
We provide equity through private players. So what we will do is seed entities that want to participate in the ecosystem of capital formation for equity. So we will seed them along with other, what is referred to as limited partners, and the private sector then determines who the winners are. So we don't want to, it's not that we don't want to, our business model doesn't allow us to provide direct equity into any one enterprise. We prefer to support an ecosystem where you have a private equity or a venture capital fund that will be seeded by a number of different sources. And we feel that our participation in providing equity in these platforms will help to scale emerging businesses through equity.
Now,
And
investing in and funding businesses, especially MSMEs, is important, but it's also risky because a lot of MSMEs, quite frankly, aren't viable. Majority of small businesses fail within the first, 5 years? So how do you balance that viability with the need to provide development funding?
well, first of all, let's sort of take a step back and understand the role of a development bank. So a development bank in its true mandate should be facilitating economic activity. And where we should be playing a role is looking at where there is a disconnect of opportunities in access to funding. So we believe that creating three very clear pillars are important. Creating the availability of funding for what would be considered elevated risk, where a new business, early stage, unproven cash flows, the quality of earnings are not yet at a standard to meet the requirements of a traditional lending agency. We believe that we should play a role there. And one of the ways that we do that is to support what is referred to as accelerators and incubators. So let me begin with explaining what an incubator does. We support incubators that help to guide these young businesses in de-risking them through putting in corporate governance, helping them to understand the importance of keeping good accounting records, understanding what it requires to be attractive to any lending institution or investor by making sure there are certain types of programs that are in place to make sure there's continuity, there's visibility of the business model. And when they are at the end of that stage and they move past the proof of concept, the scaling is supported by our investment in accelerators. And these accelerators are partners that we have that are able to move them from that early stage to the growth stage. And it will also, as the name suggests, accelerate their opportunities in building the business and, of course, attracting capital, because capital is the lifeblood of any business that's growing. So we want to make sure that we have an ecosystem that provides support. While we may not be looking at individual companies or enterprises as a specific candidate, we believe by looking at an ecosystem. And I'll give you an example. You take agriculture as a sector. We believe that a robust system of support for primary and secondary agricultural players will also provide an opportunity for other players to support the sector, logistics, packaging, post-harvest facilities for cold and dry chain. We see that as a way to help to support de-risking the sector. And therefore, we look at it as a 360-degree lens. And I think it has been working in a number of specific sectors so far. We want to deepen our relationship in de-risking. And the final thing that I want to say is that this issue of how you look at the cost of capital, by de-risking, theoretically, we should be bringing down the interest rate. Because once you understand that the elevated risk is matched by an elevated interest rate, by addressing some of these issues that I referenced, we hope over time that the lending institutions will recognize that it's not as risky to add a point or two to a particular interest rate, but they can come down to a much more competitive level. I keep saying final, but let me do one more final. The bank is now also reviewing its approach. You would have heard me mention that we want to be seen as agile and proactive. And what we recognize in other jurisdictions around the world is that development banks are taking an approach towards blended finance, where we can share in the risk and take the pressure off the candidate or the beneficiary. So take $100 of funding that's required by a candidate. That would be, and I'm making up a number now, at 5% from a lending institution. We would want to come in and probably take 20% of that and lend at a slightly lower rate, which then brings the risk profile down more because it's now a shared risk between ourselves and a lending institution. And the rate that the beneficiary will get will be a weighted average cost of capital that would be lower than what they would have got if they went directly to an AFI or an MFI. So that's the context in which we're looking at being proactive over time. And this term is referred to as blended finance.
I see quite a few questions coming in already. Our MSMEs are raring to go. They want to know how they can get this money.
Sure.
We will be taking questions at the end of the panel discussion. So keep the questions coming. As you think of them, put them in the chat so that when the time comes, we're going to take your questions. Next, let's move on to Kevin Foreman, who is the SME Country Relationship Specialist over at JMMB. Welcome and good morning, Kevin.
Thank you, and happy to be here.
So like I said in the introduction, you have several years experience in adjudicating loans, in client care, in operations. You've been in several areas of banking. Here's the question that we all want to know, because several people in the introduction, I asked the MSMEs to say whether they've ever applied for a loan and then to say whether they've received it. And more people said no than yes. Well, people said they applied, but more people said they were denied than those who said they were approved. So what are banks really looking for when assessing a loan application from an MSME?
So I probably want to step back a bit to address that question, Kalida. When we certainly engage a client, we want to understand the client's business. in a very wholesome way. To provide solutions to our clients, we must understand what their business is about, what their goals are, where they're coming from. The stories are usually very interesting. And so the better position that client is to tell their story, it puts us in a better place to provide solutions. Oftentimes clients come and say they want a loan, but when you have the discussions, you realize that a loan is not the best solution for the client at this time. There are other ways of getting capital that could include equity financing. I understand the apprehension that some people will have in giving up ownership in their business, but that's one other way of getting financing. So it is important for us to understand the business. It is important for the client to understand their business, right? I'll speak to the financial aspect in terms of what we're looking for, but I'll also speak to some non-traditional things that I personally take into account when speaking with a client. And one of them is how present you are in your business. I find that clients who, SMEs, let me say SMEs, who are on the ground in their business tend to be more successful. It is anecdotal, not scientifically tested, but that is my personal experience. SMEs who are there every day or most days, seeing the operations, running things, tend to run tighter operations. They tend to see where the savings are and implement strategies to prevent theft and so on. We're talking very real ways now. So that's one of the things. If a client is absent in their business, it's not a good sign for me, especially if it's not a business that has the controls in place that allows it to be absent.
So you're looking for a very involved owner, I suppose.
It should be.
Management team, very involved. What else?
Very involved, right. From a financial standpoint, well, before I go to financial, how well do you understand your business? When I'm speaking with you casually, how much can you tell me about your business? That's very important. Oftentimes, clients will refer you to other people when you ask them questions about their business. Yes, I understand that you may have professionals like the accountants and so on that gives details, certain details, but it is useful if you understand what's happening in your business.
So you need to know your numbers.
You need to know your numbers yourself. So as we speak to financial statements now, and that's one of the key things that banks will look for, financial statements are really records that a company should keep for itself to understand what's happening monthly, quarterly, yearly, not so much for the bank. I think there's a misconception that financial statements are for financial institutions, so you can get a loan. You should try to understand your numbers. Your financial records, as far as I'm concerned, is a mathematical expression of what you do every day, every single day. It tells how efficient you are doing what you're doing. It tells where you're saving, where there are potential savings. It tells if maybe you have too many employees. It tells a lot of things. So maintaining proper financial records is important. We hear this over and over. It's probably a cliche by now, but it should not be overstated. Your financial records are extremely important.
Is it true that banks don't lend to startups?
I can speak for JMB. And I'd say that so we've taken a deep look into our SMEs, right? When we got into this space in a serious way, we had focus groups to understand what are the issues that you're having, the pain points. And we realized that we're just going to enter the space by having lenders. We built out what we call our SME Resource Center that provides additional services to our clients for free. So when you bank with JMB, you have a resource center officer who provides you with additional support. And we have a lot of sessions that we do to upskill and so on, right? For startups, one of the things that we found out is that we will fund startups, but if we're relying on the cash flow from the startup venture, then it becomes a little bit more tricky. You said a while ago, I think you said about 60% of startups fail within the first 5 years. That is a statistical reality. But let's say you're a startup, and let's say you have expertise in what you're doing from another life. Let's say you're an engineer or a professional, and so you're venturing into this field on your own, but you have the core competencies to be successful. Then we can have a conversation. Let's say there are other sources of revenue that we can rely on for repayment for this loan, even though this business is a startup venture, then we can have a conversation. So there are ways to kind of dive into that and potentially lend, but usually if we're relying only on that startup as a source of repayment, then it becomes a bit tricky.
So generally, like how many years would you have to be in business to improve your chances of getting a loan from JMMB?
For us, a startup is up to 2 years.
Up to 2 years. So after
Yes.
2 years, it becomes a little bit easier to
It
get approved.
becomes easier. 2 years is not a long time, but we have some record there to guide us on how to go about assessing him.
What are some misconceptions you would say people have about accessing capital from the banking sector?
Khalila,
I'm sure there are many.
people's perceptions. I wouldn't want to minimize people's perceptions because as you would have realized from the chat, many people have approached banks and have not gotten through for various reasons. And I wouldn't want to appear to be minimizing that reality that you have. One of the things I say though is that sometimes people misjudge their ability to afford financing. So you'll see your financial statements will, for example, tell you that yes, man, your revenues are pretty decent and your net profit is looking okay, but the business has no cash. And at the end of the day, it is cash that pays your loan. So oftentimes companies, their cash is tied up in receivables. And SMEs in particular face a certain kind of challenge in that if you're supplying larger clients, let's say you're supplying some, large client, let's say you're a furniture manufacturer, for example, and you have a 60-day payment arrangement with that large client. To have your cash tied up for 60 days can be significant for a lot of these clients. But it shows in your revenues and even in net profit, but the cash may not be available to you. And that is why, again, it is important to have good financial records because we can then look at that and realize that maybe you need some additional support in terms of a line of credit, for example, right? Security. I speak to security. Some clients will feel that because they're pledging their property, let's say real estate as security, and there's sufficient equity in that property, they should qualify for the loan. So they're saying that what's the worst that can happen? If I can't pay you, then they can always sell the property. Unfortunately, banks don't tend to look on providing financing through those lenses. The first thing that we look for is your ability to repay. That's the first, second, and probably third thing.
Yeah, you're in the business of getting back your money with interest. Let me bring Jacqueline in here. Jacqueline Lloyd Carter is at the JBDC. She's an MSME financing specialist. Jacqueline, I would ask you what are some common barriers that you see, but I feel like Kevin has gone over some of those barriers already.
Yeah.
So how do you help entrepreneurs become investment ready?
All right. Am I being heard?
Yes, we can hear you.
Okay, wonderful. Good morning, and thank you, Kalila. How do we get them ready? Well, I must make this disclaimer that at JBDC, 80%, I would say about 80% of our clients are micro businesses.
And micro
Right.
is up to
So we
what
talk
level?
about
What type of revenue is micro?
under 5 million.
Okay.
Right. So what we do at JBDC is that we help to build the capacity of the clients. So Kevin would talk about them not being able to understand their financial information and not having the financial information. So we do a lot of trainings. We have program trainings, we have project trainings. And when I say training, I'm talking about getting persons to understand their business, to understand how to plan strategically, to understand the fundamentals of their financials, even as simple as costing and pricing. So having their product and knowing how to cost the product so that they can put the projections in place in order just to open a bank account. Having a relationship with their banks. Going back to what Kevin spoke about record keeping. So helping them to understand how to keep records so that when they approach a financial institution, they will be able to articulate what their business is about, what their product is about, you know, how much product they will sell in order to have that revenue to afford that loan. We also, in terms of the solutions, in terms of project training, Dr. Lowe spoke about digitization. So currently we have the National Digital Jamaica, I should put it, going on, where we're looking at the early stage businesses through digitization and digitalization. So those are the things that we prepare the entrepreneurs to be able to access finance, whether it is debt or mostly debts or grants. And what I find that some of our entrepreneurs do not understand that there are requirements, even if it is a grant.
A grant, yeah.
Right.
DBJ has
I
a
think
whole lot of
that a lot of
requirements, I can
persons,
tell you that
yes,
much.
I think that a lot of persons say, oh, it's free money and it's grant. So I just
Free
need to
money, but
come
you still
and
have to be accountable.
you still have to be accountable. And we have our business support advisors who pretty much handhold the clients. So take them through the processes of understanding financial management, understanding strategic planning, you know, understanding the next steps, marketing, just having a product, but you need to market it. We have our Things Jamaican store that will help persons with products to have an access, a market access position. We also have our technical support unit that will help persons with product development and incubator services. And so these will help them. We also align with the BSJ and the SRCs. And so we help them to make sure that their products are of that good quality, so much so that they can get that revenue so that they can go to a Kevin. Or so
I
that
have a
they can,
comment here in the chat from Damaris. Damaris
yeah.
says, under 5 million in revenue, they very often can't pay for support services. So when they come to JBDC, what does that look like? Is it free? Do they have to pay something? How does it work?
Okay, so becoming a client at JBDC is free. Our trainings, we have fundamental of business training, and I would want to say it's free because it's $4,000 that is charged to the entrepreneur, and that's over a month of training. And by a month, I mean 4 to 5 different 3-hour sessions. And I would want to call that pretty much free, where we look at mindset. Did you just come into some money and decide to go do a business? We heard the statistics about, you know, not reaching anywhere after 5 years or before 5 years. We want them to understand about the sustainability of the business, in order for you to do a projection, a 5-year projection, a 3-year projection to go to the bank, we want to know that you understand, how the business will grow.
So if
year
I
one,
need
year
help
two,
with
year
that, with
three.
preparing those financial statements and projections, I can come to you and you will do it for me for free?
No.
I didn't think so.
I think that's what they want answered. But what we will do is we will engage consultants, but what we will ensure is that once you get the consultant and you get a financial statement, it's not just a paper that you get with a number, with numbers on it. You understand that financial statement. So we will handhold you, and we will also ensure that the information that is gathered in order for that consultant to do that financial statement is accurate, and it's compiled properly and can be used in order to make proper decisions, because it's also important that they understand the stage of their business. And that's why we do an assessment of the organizations, because you don't want somebody to go taking a loan when really they can only afford to get a grant, because they are not able to afford repaying a loan.
Right.
Right. So we do assessments of them and ensure that, they understand where they're positioned in terms of in the market, and also the stage of their business. We want them to understand, what stage is your business at? Is your business able to go and take a $5 million loan? What's the purpose of that loan? Are you able to get a grant through Heart, where they will give you a loan for equipment if that is your need? So persons need to understand what their needs are, and which channel of support is best for them.
Well, let me bring Ricardo in here because I really want to get to these questions. The questions are coming in fast and furious in the chat. Ricardo, as the entrepreneur representative on the panel and somebody who's been through it all, been through the ringer, have a company that's actually listed on the Jamaica Stock Exchange. What has been like one of the hardest challenges for you in accessing capital, and how did you overcome that?
No, Kalila, first of all, thanks for having me and welcome everyone to Funding the Future. So, Kalila, as you rightly said, we're in that very future we spoke about 10 years ago, right? So I want to take you back to where we just started and the challenges that we had. The challenges now looks a little different from back then. There's been some improvements, but I kind of want to take you back. So the year is 2015. We're trying to raise capital. We would have just started the company and we're aggressively building out our software and content, right? Now, our business is an IT business, is an online technology company where the backbone of the business is a software which is called a learning management system, right? And we've kind of invested a lot of money in kind of building this. This is what's called an intangible asset. It's something that you can't touch, you can't feel. It's not a property. It's none of that. It's intangible. And so we went to the bank.
Which means that it's hard to value, right?
Right. It's very hard to value. And in Jamaica, you kind of undervalue it in some sense, right? And so we went to the bank and we're like, okay, we need to borrow $50 million, right? We have this great idea. We want to get this right. We want to borrow 50 million. The bank says no. We can't use your assets as collateral and we can't lend you the money. So we went to DBJ. We said to DBJ, look, we have this great idea. We need to get this right. We initially got a grant for $2.5 million. By this time, Kalila, we would have raised what we call angel investment funding, right? So we raised $12 million, from a bunch of private investors where I kind of met with them at dinner and sold them on the idea. And this was in their minds kind of sweat capital where they give the capital and they just hope it works, right? And so I'm here working for 2 years. Boom, I approached the bank. When I approached the bank, they said no. DBJ came on board. They gave us what's called a credit enhancement facility. So that's what Dr. Lowe spoke about, right? And what that did for the bank was to essentially says, okay, you don't have the collateral to give to me, but here comes Big Brother willing to give you the collateral so that you can get this loan. So we got that loan, right? In addition to that, we were trying at the time to use our receivables, meaning we had a big contract, Kalila, for many millions. And, you know, we went to the bank and said, okay, here are our receivables, give us a loan. Bank says no. And so DBJ help was very important there. So the biggest issue we had initially, to answer that question directly, was to raise capital with an intangible asset. It was a no-no at that time. We've gotten slightly better there. Now, once we started with the bank, those interest rates started hitting us, right? Like over 1 year, over 2 years, you're spending $1 million, $2 million in interest rate monthly. This is
Wow.
money that you could use to pay an additional staff and grow the business. What I learned originally was that when you're trying to grow, it's very hard to be kind of burdened by very large interest payments, right? And loan repayments. And so what we did, we negotiated what's called a moratorium, which is essentially a pause in your principal payments for, let's say, a year or two until the business is at a level that it can repay back the principal. Okay, so that's the loans, right? So, okay, we needed to grow. We got more clients and so on. We were growing. The year is 2017, Kalila. We needed money. We went to our banking partners and tried to get some money. They said not for us at this time, so we went to our investment partner. So when we went to the investment bank, we said we needed $40 million to do something. And we were going to build out this online software that has now kind of morphed into something big. But we went to them and asked for 40 million. They said, tell you what I'll do. I'll give you 20 million now. And if you achieve these KPIs, these milestones, we have another 20 million that you can access. And so we drew down on 20 million. And then what we had was our rights to actually draw down on another 20 million. Of course, we achieved those KPIs by 2019. We drew down on that money. Now, finally, in 2020, COVID happened. And in 2020, no governments were paying, and they weren't paying on time. But we had a product that everybody wanted. People were at home learning. And so it was like hot bread. And so guess what we did, Kalila? We went to the banks, the investment banks, and we said to them, listen, we want to borrow $100 million to give credit to these governments while we implement what they need to keep people at home. And we said to them something very important, that we don't want you to value the company now, right? Give us this money, and in the next valuation round, which turned out to be IPO, we will value your investment at that time. But until then, we will accumulate that money you gave to us at an interest rate, and at that valuation period, we will convert it into equity. So said, so done. We raised $100 million. We were able to keep the business in COVID and give credits to these governments. And that 100 million was actually converted at IPO now into equity in our company. And that's kind of how we got to 2022. Now, at 2022, we did a massive IPO for $350 million. We converted that 100 million, repaid our debts to DBJ, right? And then we essentially got equity from investors that we could continue to grow the business over the period. And so my message to all MSMEs is very simple. Raise money based on where you are and try to just get to the next milestone, right? Break down that future in parts, 1 year parts, 2 year parts, put a KPI on it. Keep communicating to your stakeholders. So DBJ, every time I get to big them up, I big them up, right? Keep communicating, keep them in tune with what the business is doing, what the business is going through, and remain accountable to them, because you will need more money in the future. And if you don't report, you won't get it.
So what I'm hearing is be creative and think outside the box. Approach partners like DBJ who can help, especially for tech entrepreneurs, because I remember experiencing that as well. And my business is a virtual business. We do a lot of work online. And I remember looking at my accountant did our financial statements, and they were valuing the website at like $1,000 US, which is what I paid the web developer. I'm like, but the website is generating income. How can it be worth just $1,000 US? The concept of intangible assets, I feel like the banking sector doesn't fully appreciate. But then the third thing you said, Ricardo, is seeking equity financing. And you also got angel investors early on. How do you find these people? How do you find equity partners, people who are willing to invest in your business? Like many people online right now are probably thinking, where do I go to get somebody who can invest in my business?
That's a very good question, Kalila. And my philosophy in life is very simple. Nobody walk past money on the road. They always stop to pick it up. And the reason why I mentioned this is simple. if you have something that is valuable, according to you, and you are able to articulate that to someone else who has the money, keep in mind that this person is also being bombarded by other persons who need that same money. And so your ability to actually know what you're doing, where you're trying to get it to, and showing the competence and ability to do that is the most important thing for an early stage investor, because most times the companies they're investing in, they're going to fail. And so what
Well,
they're
who are the people who have the money? Like, are there groups of investors? Where do they hang out? Where do I meet these people?
you know what, I'm not a socialite, so I don't hang out and I don't know where they are, but I tell you this, right? And for me, it was just about, again, I went to Jamaica College, full disclosure, and my old boys network was a network I tapped into. I checked with them and so on. So my first investment was from an old boy, but then I took his investment and go to someone else who was not an old boy and told him that he gave me money. And essentially, because he gave me money, I was trying to get money from him. But here's a very compelling one that I got that I want to share with everybody. I rented a property from a gentleman, and I found out who the owner was. And I couldn't pay the rent, Kalila. So I made a deal with him essentially to convert the rent into equity. So he didn't give me cash, but he gave me a property, and he knew a lot of people. And so investment may come in cash, but it may also come in connection. And you just have to knock on those doors and see who is there. So it wasn't a network for me. I really just went out into the streets, found people online, went to them, and kind of used the network that I had and extended that.
Yeah, so networking is extremely important. Attending these events, people, you guys, look, take a note of who's in the chat. So other people, other entrepreneurs are in the chat right now, some of whom may be investors, some of whom may know investors. So it's great to get to know each other as entrepreneurs and share stories so that you can learn, where they're finding opportunities as well. Attending in-person events, extremely important. Let's get to our Q&A because we have a lot of questions in the chat and I really want to get to them. I'm going to start first with a couple of questions that are in the actual Q&A. So guys, I see we have so many questions here that they might be getting a little bit lost. So let me go to the Q&A here in Zoom. This one came in early from Karine Thomas. Why are the processes for applying for grants so complex? So I guess this one is for Dr. Lowe. Why are the processes for applying for grants so complex and the requirements somewhat prohibitive, i.e. revenue, business size, etc.? There seems to be a greater failure rate for MSMEs outside of the urban areas. What kind of assistance can DBJ extend to entrepreneurs to meet these requirements and position them for a successful application for grants?
Okay, thank you for that question. So let me begin by trying to see the perspective that that person who posed the question might have been coming from, because our grant program has been quite successful for a number of reasons. One, we have to also understand the nature of how our grants are designed and executed. Our international development partners provide us with support for developing, designing, and implementing grants, and they come with very clear guidelines as to what will constitute monitoring and evaluation for impact. So there are times where grants might be advertised. We get candidates who are successful most of the times, and then sometimes some are not fortunate or have not met the criteria. And that's usually a function of just the design of the program on a specific nature. So let's take an intervention for grants where you may need 5 or 6 different things to be able to check those boxes. Unfortunately, if you don't check half of those boxes, there's not a lot of flexibility for the bank to sort of offset it against some other criteria. But if you're marginally able to qualify, then, and there's some discretion, then we tend to look at it in that realm. So it's not a black and white in every case. And I'd love to hear more from that person if they reach out to us after this, so we can provide a very direct response as to what their specific experience was. But again, speaking about grants, as I said, we have great programs. Let me first tell you about the Biggie program, which is boosting innovation. It's an abbreviation for a partnership that we have with IDB and the EU, and it's geared towards MSMEs, and it has a tremendous level of success in interventions in the marketplace based on 5 components. And some of those components are very specific for purposes, but they go across products and services. So again, we'd be very happy for anyone who wants to learn more about our grant programs to contact us after this. The head of that program is Christopher Brown. He's a very passionate executive here at TBJ, very knowledgeable, and has a great perspective on what could create a success in terms of candidates' eligibility for that. I think there's a part 2 to that question in terms of out of town. And if I recall, the question was, could you just repeat the last part of the question about out of town?
I think I I think I just marked it as
Uh,
answered, so I don't see it anymore. But they were
Okay.
just making the point that it seems that more businesses that are in the rural areas fail, so they have a higher failure rate than urban businesses. I'm not sure there was a question attached to that. That might have just been a
Your
comment.
statement. The data that I am privy to does not suggest that there's a higher failure rate for rural or urban candidates. I do know that sometimes the nature of a business idea, if it's early stage, sometimes does not meet the criteria for a particular purpose just based on location, and it's not explicit to someone who wants to do, let's say, a project that has a high level of success because of access to markets, for example. So if somebody has a business plan and the area within which they operate does not meet that sort of first level filter, then of course that works against them. That's the only real reason where a candidate in a rural area based on a particular micro market may have something working against them, but generally we do not discriminate. In fact, we're actually trying to increase our outreach outside of Kingston and the corporate area, or all the big urban centers, to make sure that we're much more inclusive in terms of finding pioneering businesses that need to be scaled and supported with our capital solutions.
I have 2 questions here about incubators. I'm going to direct these to Jackie. So Indradale wants to know, how can we identify those incubator institutions? And then Shannon is asking you to please go further into explaining the incubator institution and how exactly they can help an MSME.
All right, so when I spoke to incubator, I was speaking specifically to the incubator that we do have here at JBDC, and that incubator will assist you with business development. So in terms of, say you're doing a product and you want to understand how to navigate the different requirements for the BSJ, that's Bureau of Standards, in terms of labeling, in terms of even the production. We have production spaces, food, essential oils, clothing. So we have those type of incubators that will assist you. So you need a production space. You need a space to do your different production that we facilitate, and we also have engineers who will assist you in getting the product fit and proper, and so those are the type of incubators I was referring to.
Okay. Question for Kevin. This is from Trisha Lee. What kind of controls would satisfy JMMB that a partially absent business owner is worth investing in?
That's a very good question. So I'd say it would lean into technology. And I heard Jackie mention companies digitizing, which is maybe a totally different conversation, but it is very important. So let's say your sales are run through a point of sale. So you have some controls there where the sales information is captured at a central point, and so it's easier to monitor that activity. That's one. What kind of quality controls in terms of client care do you have in place? When you're not there, is there that particular person or persons who ensure that your staff are attending to your clients, your most valued treasure, in the way that you would want them attended to? What about inventory management?
Yeah.
How do you monitor your inventory when you're not there? Do you have an inventory management system in place that gives you some sort of coverage when you're not there to ensure that nobody's stealing? Let's face it, in Jamaica here, one of the main issues my SMEs face is the issue of theft. A lot of employees find extremely creative ways of relieving their bosses of their inventory.
I've
In
heard
fact,
some stories.
in fact, there's a well-established hardware client who told me that it is not so much what comes in, it is what goes out. So even your perimeter walls, everything that you have in place has to be positioned in such a way that it is difficult for your inventory to leave without your knowledge. So it is how you manage your inventory, how you're managing your revenues, your sales. Is it all over the place? Is it captured centrally? Is it being recorded digitally so it's easy to monitor? And do you have like security systems in place at strategic points? These are very practical things that SMEs need to look at.
Question for Dr. Lowe. Can you elaborate on startup grants for technology-based and agribusiness in terms of requirements?
Okay, so we have a number of programs that are across different offerings across different programs. So you may be in a situation where you could be eligible for a grant for agriculture, but you're also able to access another facility, which we consider to be a modified or a hybrid wrap. So rather than just isolating all the different areas that we have grants for, whether they're energy, new idea startup, capacity building in terms of technical training, whatever it is, we have a number of them, but they're not specific to any one area. And as I said, once you reach out to us, we'll be in a better position to evaluate what your needs are and determine from our suite of offerings what's possible. Because again, we do have advertised grants, but we also have hybrid relationships that can be developed for your specific needs.
Question for Kevin Foreman. This is from Damaris, Maine. Banking officers need to be trained to value creative and other intangible assets. We heard Ricardo speaking about that. How are the banks addressing this?
Again, that's another interesting observation. So if you think about valuing your intellectual property, because that's what it really means, that intangible asset as it relates to, let's say, a tech company relates to your intellectual property. JIPO, Jamaica Intellectual Property Office, they have been doing some work with banks and other stakeholders to kind of create an ecosystem where we can pull in evaluators who are certified in pretty much the same way that we would value, let's say, real estate or a motor vehicle. To say that when you look at a financial statement on the balance sheet, you can identify the value in a more appropriate way of the company using the intellectual property. So there's a formal mechanism being looked at right now. There's a gentleman from the UK that was here. I did some work with him also. So that is being looked at through JIPO. But what needs to be created is that ecosystem where we pull in those valuators, similar to how we work with the real estate valuators and motor vehicle valuators, to say that this is the value that they're placing on your intellectual property based on their assessment, their scientific assessment. And so then banks can then lean into that more to say that this gives me comfort that I can rely on the value of your business. What we're seeing is that some businesses are being undervalued in the tech space because the real value of their intellectual property is not being accounted for.
So true. Absolutely true. I'm going to address the next question to Jackie from JBDC. Solely because, Jacqueline, I see that you have experience in credit and credit adjudication and credit administration and negotiations.
Not
It could,
here at JBDC, but go ahead, Kalila.
yeah, it could be directed to Kevin again, but I want to bring, or even Dr. Lowe, but I want to bring you in for your perspective. So this question is from Romeo Farquharson.
Yes.
Well, I guess it's for Dr. Lowe, actually. It says, how do institutions like DBJ view businesses who the owner or a director has had bad debt? Is the company automatically disqualified from getting assistance?
That's for me.
Well, he says, how do institutions like DBJ view
Oh,
those
like DBJ.
businesses?
Okay. First, we want to put a question like this in context. Now, if somebody has a very recent, current, unfortunate situation where they have that type of bad debt that is within 12 months, it does make it problematic based on lending policies. If someone had an unfortunate business situation several years ago, but it's still known and apparent, and they've done a number of things to improve their creditworthiness since, they've been able to demonstrate context as to why it happened and whatever the needs of the current credit requests are, and they are within the realm of the normal things as the quality of the revenues, quality of the collateral, the quality of the business idea, then there's some amount of discretion that can be placed. Again, in the context of how much and the terms and conditions, all these roll into one. So the real takeaway is, simply put, it depends. And the further away you are from that unfortunate event with an improvement in your creditworthiness, the better it is. And that's the best way to look at it. And I want to just add some context to this, because I know for a long time there's a stigma associated with credit or bad credit in business. And there has to be some sort of a segmentation to understand how businesses fail and sometimes fail to perform on their obligations. And once there's a deep dive as to the context of that, it does tell a story. And hopefully the story works in favor of the candidate if it's in the normal business of business, so to speak. You look at the US, you look at other major markets around the world, there are people who have failed several times or developed bad credit terms, but there's an avenue for redemption. And one of the best things that I think that has happened to Jamaica in terms of how the equivalent of a Chapter 11 in the States works is when we had our Insolvency Act passed roughly a decade ago, which gives the ability to support a failing business so you don't have a total burnout, and that the way in which the debt is repackaged or supported, and even though it might reflect an actual founder or owner, the business itself is managed in a way that has a softer landing. So I think there's a environment in which there's a lot more discretion than what prevailed in the past. And it's also going to be dependent on each institution as to how they view the credit risk.
Well, Jackie, you can probably add some perspective here.
Yes,
Yes.
I also wanted to say that having a good banking relationship is very, very important. So you know that there are credit bureaus, and the credit bureaus will support in providing that information to the different banks when somebody is taking a loan. So if you have that relationship with your bank where you can go in and you can say what's happening with you, when you fall into situations, and even be able to explain what happened, why things went awry, then it puts you in a better position. So it is always important that you maintain a very good banking relationship with your banks. And I concur with what Dr. Lou says. It's usually on an individual basis. And when a company finds that they are in a particular situation, it's good that they do not stay away, and pretend as if it's not happening, but ensure that you build that relationship with your banker so they know what's happening with you and can assist you in getting out of that situation in a faster time.
All right, I wish we had an opportunity to answer more questions because there's so many and there's so much information that people are starving for right now. But we will give you guys an opportunity, or we will share contact information with you so you can ask your specific questions, anything that wasn't addressed and that you needed more clarity on, just before we wrap up the segment. But I want to end by asking each of our panelists today, a question in one sentence. What is the most important thing MSMEs should remember about funding their future? Let's start with Ricardo.
Yeah, I mean, for me, there are a number of things, but if I were to just kind of simplify it, it is to keep alive so that you can deliver tomorrow using cash flow. So that's kind of how I would. Cash flow is the life and blood of the company, right? Use it to get to the next milestone so that you're alive, so that you can whether raise fund or generate revenues to go forward.
Because you don't want to have to be paying for something that's already dead.
Yeah.
Still paying back the loan and the business is no longer in business.
Yeah.
Ugh. Yeah. Kevin?
Well, this could be a very long sentence, but to be concise, I'd say see your operations as a business, not as a hustle. I think that will direct how you approach it. It will direct how you plan. It will direct how disciplined you are in attending to your business. So see yourself as someone who is in business with a purpose and learn as much as you can and apply what you've learned in a very practical way. That's all.
See yourself as a business, not as a hustle. Wise words. Jacqueline?
I had that very same thought in my head, Kevin. But I would want to add that entrepreneurs need to understand their business. It's not just, I don't just own a business, but I have intricate understanding of what I'm not saying you need to be an accountant, and I'm not saying you need to be the legal person, but have an understanding of what your business is about and be able to articulate, what you're doing and why you are in business, and not just, you don't just start a business because, oh, I was made redundant and I have some money. You start a business because there's a purpose and you want to meet the need of someone. You're solving a problem. And I think we will get very far when we know that we are solving a problem and we do all we need to do to solve that problem.
Dr. Lowe?
I would define this challenge as being pragmatic, understanding that you can't simply look through your lens outwards, but understand how your market looks at you and understand how your potential capital partners look at you. And I think there's large evidence that there's a mismatch of expectations because of that. So pragmatism and looking from the outside at yourself as a business owner is going to be important because, again, that mismatch of expectations between your market, which is ultimately where you're deriving your revenue sources from, and your capital partners, the sources from which you're drawing your support and development capital from, that's really where you have to focus and make sure they're aligned. And that will help you in your journey of this entrepreneurial journey.
Wonderful. Excellent advice. Thank you all for sharing your perspectives. Thank you so much to our attendees. I see how many people, over 100 people are attending today, getting that advice, learning how to get this money, that funding for their businesses. And we want to let you know as well that DBJ is committed to helping your business grow. There is a link in the chat with a form. So if you still have questions, or if your question wasn't answered today in this forum, please complete the contact form that is in the chat. It's right towards the end, and somebody is going to respond to you. There's also a contact number. You can reach out to DBJ at 876-292-4000. That's 876-292-4000, or just complete the form in the chat. Now, Jackie and Kevin, and I don't know if Ricardo wants to give out his info like that, but Jackie and Kevin, how can people reach you? Jackie, you first at JBDC.
All right, so we can be reached at 928-5161-5, or you can visit our website, JBDC at jbdc.net, right?
JBDC.net. All right. Or call the office.
Yes,
Google it. You'll find it.
928-5161-5.
And Kevin, JMMB?
I'll drop mine in the chat, but it's telephone is 876-410-9465. And my email, Kevin_Foreman@jmmb.com.
And Ricardo, you're actually an angel investor yourself.
Yeah, by DBJ, I'm an angel investor, and I can invest up to 100,000 US in a business, and I believe DBJ would match that. So it's a part of a special program that they have. So I just wanted to let persons in the audience know that if you have an idea that is sufficiently great, you could certainly apply, and I'm quite happy and willing to look at it as well and give the support.
How do they apply?
So they can apply, I believe there's a link online. I mean, if someone could actually share it where they can.
Oh, it's through DBJ?
Yeah, so how it works essentially is that I would have to, see the business. There are all these pitch sessions that takes place ever so often. It's usually on a Thursday, and you come and you pitch. And me and other, angel investors, they look at it and they decide. So there's a link. If you can reach out to me on LinkedIn, I'll get that link and share it with you guys. Oh, I believe someone is sharing it actually. But no, you can reach out to me on LinkedIn and I'll share it. But yes, I can invest up to $15 million, and DBJ, if they like it, can match up to that amount as well.
Good stuff. Somebody, Kevin, somebody wants to know if you're on LinkedIn too.
Yes, I am.
Okay, and Kevin has shared his contact information in the chat. So Ricardo, just type in his name, Ricardo Allen. Find him on LinkedIn. You should find him. Kevin is on the chat. Google JBDC. You can find their info. And for DBJ, the phone number is 876-292-4000. There is a contact form, a link to a contact form in the chat as well if you had a question that wasn't answered and you want some follow-up with DBJ. So that brings us to an end for today. Thank you so much for attending this great panel discussion, Funding the Future, MSMEs Access to Capital from Startup to Scaling. We hope to see you again soon for whenever the next one is organized. And I hope that you've gotten some tangible information out of this and you are ready to take action to the next level.
If I may, just before you end, I'd like to also congratulate Ricardo again on his fantastic journey and his support for the ecosystem from which he started. So congratulations to you and all the future entrepreneurs on this. Thank you again, Khalida.
Thank you very much. Thank you. One time, Time Magazine, one time. Wouldn't have been possible without DBJ as well. Just a plug, but anyhow.
Yes, well, that's going to do it until next time. Thanks again, everyone. Bye.
All right, thank you too.
Thanks, guys.
Bye.
Bye.